Yeah.
All right, folks. Thanks for joining us this afternoon. Appreciate everybody for jumping on. Just to let you guys know, this session will be recorded. So if you don't want your face shown, you can exit stage left or right, whichever is best for you. But today's Saturday session is just for educational purposes only, merely ideas given by the host. Nothing stated during the Zoom session should be taken as an indication to buy or sell. Nothing stated in the Zoom session should be seen as investment advice. If investment advice is needed, we ask that you please contact the registered financial advisor or fiduciary. With that being said, it's all yours, Pat.
All right. Thank you very much, sir. And thank you all for joining us this afternoon. Let me go ahead and pull my screen here.
And I'll just watch the chat and just check the questions and stuff. Then when you have time, I'll just blurt them out, see if you can answer them.
No problem. Thank you. Can y'all see my screen? All right, let's see. So you can see my screen, right?
Yeah, you're straight.
Okay. Yes, all right. All right. So today we're going to go over some technical analysis. I think this came from where my wife did, and Crystal did the Walk Away presentation. Kel's put me on the spot to share some technical analysis here. So it's going to be some few things that have been working for me, probably I would say maybe the last 6 months, so to speak. As we all know, every time we always try to find something that worked for us. I mean, as a trader, sometimes you end up being all over the place. You know, when somebody tells you, hey, this works, or you go on YouTube, there's so many different strategies that are out there. But at some point, you got to find one that worked for you, or maybe two that work for you. And in my situation, I have actually two that I'm using right now. So we're just going to go ahead and talk about the two that I've been using now. And I know that maybe there are some other people that are joining that may be new to trading. So I have the PowerPoint made in such a way that, you know, it will kind of break it down where anybody can understand it. And if you don't, I mean, we got to chat, or we can have question and answers at the end of the presentation. Okay, so we're going to do, like I said, a brief overview of technical analysis, trading psychology, how to master technical analysis using indicators, candlesticks, patterns, and more. Chart reading, which I will use a strategy that I've been using. It's a little bit complicated, but trust me, it's not that complicated as well. And trade management, which includes risk management, so to speak. And I think that's something that most traders do forget about, their risk management. Everybody think about, hey, I want to make this amount of money, but we don't think about the risk. Hey, how much can I lose? So what is technical analysis? A trading discipline employed to evaluate investments and identify trading opportunities by analyzing statistical trends gathered from trading. There's this guy here, Jesse Livermore, who is one of the greatest traders in history, pretty much back in the 1920s. And this quote that he said, instead of hoping, he must fear. Instead of fearing, he must hope. He must fear that his loss may develop into a much bigger loss, and hope that his profit may become a big profit. So again, it goes by saying, hey, your risk management should be the number one thing on your mind when you enter a trade. And this guy, back in the 1920s, Jesse Livermore used to be kicked out of these bucket shops, which pretty much were like the trading shops at that point in time, because he figured out how the market makers were manipulating the market. So he kind of just watched their pattern and was able to capitalize on it. So every time that he goes to these bucket shops, you know, he makes so much money, kind of like going to a casino. and then they will kick him out once they figure out, hey, he knows what they've been doing. And it's funny because when you read the book, his book, even though it was written back in 1920s, I mean, some of the stuff that we're doing now with technology is still the same things that they've been doing, the market makers have been using. Go on to the next slide. So trading is 90% mental. Take profits, don't be greedy, which I think we've all been guilty, you know, especially like if you start trading and you're not trading with large sum of money, you want to really milk the profit that you have and get every penny that you can get. And sometimes that can turn against you and you end up losing more than what you thought. So always set a plan, stick to your plan. If you're saying, hey, you know what, I want to make 50% today. If you make your 50%, there's nothing wrong with you just getting up. I mean, I've done it so many times before, like, hey, damn, you know, should I stayed or should I, you know, stayed in the trade and make another 20%? And there were times that, hey, I stayed in the trade and that 20% ended up becoming negative 20% or negative 10%. So no FOMO, as we all know, managing your stress and managing your fear. If you get into a trade and you have that strong conviction and say, hey, this is going to work because you've tested your strategy, you like your setup. Once the setup hits, I mean, you just go in, make your money, and get out. All right, going to the next slide. So again, what is an uptrend, downtrend, sideways? It's only three ways that the market moves or stocks moves. So of course, an uptrend is going to make where the stocks are making higher highs and higher lows. The downtrend is going to be the opposite, where pretty much making the lower highs and lower lows. And the sideways, which we call it consolidation, where pretty much they're range bound, they're not really going up or they're not going down. And eventually, I mean, there are some books that talks about all these trends, and you will find out that the market makers are the ones making all these trends. Even the candles that we see, they make the candle. They can easily make a candle for you however they want to do. Wyckoff price cycle. Wyckoff is, what's his name? Ronald Wyckoff, I believe his first name was. He's one of the people back in the 90s, back in the 1920s as well, that was pretty much preaching to the public or retail investors like, hey, you know what, they are manipulating these markets and there's a certain way that they go about it. He actually interviewed Jesse Livermore, JP Morgan. You know, of course, we all know JP Morgan as one of the biggest market makers that we have. So trying to follow their pattern as to how they go about trading. Of course, they have the bigger pockets. So when they move, they can move the market and we just follow them. And this price cycle that he created was pretty much a kind of every chart pattern is going to start from this accumulation phase. So this accumulation phase is going to be where they're setting up their positions. And it can take anywhere from a week to a month or sometimes more than a month. And we're going to talk about reading the tapes. That's one of the things that Jesse Livermore used to do, by reading the tapes and be able to figure out the movements that was going to come. So whenever you see a stock kind of accumulating, you know, it's in the range, it's not really making higher highs, and make a higher high and then it comes back down or it retraces. I mean, at that point in time, they're trying to make their position. And whenever they're ready to move the market, it jumps right up, they mark it up, and it gets up here to the top, because nobody really knows. As far as retail traders, we don't know what's the top and where's the bottom. Only the market makers know. And they have, just like I said before, when you get into a trade, you know your target. They have their price, that they have their target that they want to take profit. Okay, so we're going to start from here, say price of $50. When we get to $75, we're going to take half of our profit. If we can move the market to $100, which is their ultimate goal, then that's when they're going to sell. So as retail traders, you know, once we fall into this, hey, we see this going up, we get all excited. You want to jump in, the stock market is going up, everybody is happy. And then when it gets up here, because the volume that they move is so much, they're not just gonna sell everything and drop the market right away. they're gonna gradually sell right in our faces, and we still think, oh, we going high highs. And the next thing you know, you wake up and you're like, okay, what happened to my stock? Or, you have some contrast the day before and you wake up the next morning and it's dropping with no news. And it's just because, you know what, they exited their position. So the same way for the distribution as they did with accumulation, they're going to do that on top. And then once they're done, once they exit their position, of course, as the retail traders, we're going to follow them. And of course, it's going to be late for us and the stock drops down. They repeat the same cycle over and over and over. And how can you figure out what they're doing? Like I said again, it comes through the tapes. We're going to talk about the ECN, the level 2, the level 3s. So let's go on to the next one. Again, I mean, I'm sure most of you guys know about the candles. If you're here and you're new to it, pretty much this is a bullish candle, which pretty much most of the time is going to open down here. If you have some sellers, it's going to bring it down. If you have more buying pressure or more buyers down here, it's going to push all the way up. It can go all the way up here. And if you still have some sellers, it's going to bring it back down and it closes here. The opposite is going to be for a bearish candle, which is going to open up top, comes all the way down. And if you have some buyers here, they're going to try and push it up at the same time as well. One thing that I think since I've been trading or been reading books and doing research on technical analysis, volume seems to be the very common indicator of every technical analysis. I don't care what strategy anybody's using. There's so many strategies out there. I mean, some of them, I think a couple of weeks ago, I was looking at this on Twitter, looking at this girl that has, and it looks very complicated, and it seemed like, I think it's called expansion W something. And it kind of shows you where the stock is going to eventually move up to, whether on the upside or the downside. And she predicted, I think it was Boeing. So she had predicted, okay, hey, by March 19, Boeing is going to end up being in the 300s. And if you look at Boeing's price now, it's still like, what, 250, 260? That's where it closed last week. So nothing is accurate, 100% accurate. But one thing you're going to always notice is going to be the volume. So I think if you want to understand how price moves in correlation to volume, it's going to be something that every trader needs to really expand on. And at the end of the presentation, I do have a resource. It's a book out there that really, really dives deep into volume analysis. And I think we all need to read that, or, if there's something else that some other book that is going to do a better job explaining that, I think you need to focus that and attach it to your trading plan. Again, how to use support and resistance for determining price entry and exits. We all know support, which is going to be a level where price tends to fall and pretty much going to be biased there. So it's going to buy the price back up. A good example, I'm not sure if anybody was paying attention to Baidu like last week. It really was selling off to the point where I think Baidu ended up, and the reason why I guess I know because I was doing puts on it until it got to that buying zone where they couldn't really afford, because they had loaded up the computers to buy at that point. And we're going to go with that too. So that's always going to be a support level, and the support level is going to be where the money maker is going to be, because they have the bigger pockets to be able to buy it. And if not, then the stock is going to keep falling down. Resistance also is going to be pretty much kind of goes back to, excuse me, let me go back here. It goes back into this thing here where the distribution is. So this is going to be your support for the accumulation period, because that's when they're setting up positions they're buying. And the distribution part is going to be your resistance, because at this point in time, if you hold in the stock and you think, okay, it's going to go past this, it's not going to go past that phase, because that's going to be your resistance. That's where the seller is going to be, or the market maker is going to be to sell down. So that explains the support and the resistance too. All right, so trade management and the way I go about trading, my set up pretty much for the day. I get up early in the morning, especially on the weekends. Hey, I look over some charts. That maybe I look over the previous week that didn't fall in my setup. I look at what was weak or what was strong, what closed strong on the Friday, what closed weak on the Friday. If it's something that, okay, hey, is it going to keep falling or is it going to reverse and retrace or change trend? So I look at all those charts and I try not to, before I used to be, hey, maybe I have about 15, 20 charts I'm looking at. And eventually it seems to kind of get overwhelmed with that many charts, by looking at that many charts. So if you can, limit it down to 5, 6 stocks, I'll say the most. Have a good, a good 2, 3 setups for your strong ones that are okay. Hey, okay, if you can get in, those are the ones that you're going to go with. And sometimes things might not work out the same way. It might be a news that come out that Monday morning, and here go the stock that you thought you were going to be able to trade. So you can put on to the side and move on to the next one. So my routine pretty much is in the morning, I try to do my pre-market analysis by looking at stocks with pre-market volume of over 100,000. Because in the pre-market, and I'm talking about pre-market being around 7 a.m. Eastern time. At that time, it's going to be some stuff, especially like on Monday mornings, you might not have a lot of volume for some of these stocks. And you always want a very liquid stock with small spreads. When I say small spreads, if the bid is saying $100, you want the ask to be like 100.2, or maybe that's not a good example. Like say if it's showing $5, you want the ask to be 5.1, like a penny spread, so to speak. So if you look at like say the SPY always have a very small spreads. Compare that to a stock like say Shopify or Melly. Those stocks gonna have like a bid-ask spread of maybe $10 or $20. And eventually, even if, hey, you end up making money or say your plan works for you and the stock, you did a call, the stock went up and it's time to sell, because you have such a big ask spread, you're not going to be able to sell the stock for the price that you want, because your ask might be $400 and then your bid is like, say, $391. So you got that either $9 difference, and the market makers, they want to make money too. So you might put your made price at say $395, they're not going to feel it. But if you put at say $392, which is closest to the bid, they will feel it. But you can't really go up to where the ask is. So I try to stick to stocks with very small spreads. I look for gappers, so momentum stocks in pre-market with volume again. The gap is normally when I set up my scanner, I do like say 5% gapping up or 5% gapping down. Stocks with high implied volatility. Of course, we do options, so having a stock with high implied volatility is always going to help, and it can go both ways. It can go up or it can go down. And I put on here $50 and under stocks. I think when you're starting to day trade, it's a good level to start. You find a lot of stocks that are liquid, that are also cheaper options, so you don't have to use a lot of money or use a lot of capital to day trade. Plan your entries and your exits depend on your risk. So before I get into a trade, I know, hey, this is my target. This is going to be my entry by looking at the setup. If I can get in at that price, I'll look at the option chain. If I can get in at that price, great. If not, I have a second plan to where I think I can get in. And it might limit your profit that you're going to make for that day. But at the same time, hey, if you have that plan going in, then you know what to expect. And what time do you enter a trade? Personally, I'll say probably beginning of this year and like this first quarter, I have been entering the market, I'll say 15, 20 minutes after opening. I don't jump in right away. The only time I would say I jump in is if I do have something overnight that I want to sell. This is a good time to sell. Like the first 15 minutes when the market opens, option prices up, the premiums are high. So if you want to sell something, that's a good time to sell. But other than that, if I'm trying to buy something, I'll wait for at least 15, 20 minutes, 9:45, 9:50 before I jump in.
Hey, Patrick, before you move on to Shashawn, if you can check the waiting room, it's a couple of people waiting to jump in.
Oh, my bad. My bad. All right, hold on for me 1 second. All right, here we go. Yeah. Sorry, y'all. I'm sorry. Okay, I made all, so everybody should be coming in. Yeah, thank you, man. All right, so where was I? All right, so let's go to the next slide. Excuse me. So going back to that, just Livermore's book that I was talking about, some of the major levels for day trading. Back then, they used to trade on fractions, and now everything is computerized. You have all these algo trading or the bots. They are also programmed to sell and buy on all these levels as well. So for my day trading, and once I go into the chart, this will make sense to you. I always enter if I'm going long or doing a call. I always enter if the level, say the level is $20. I'm not going to enter at $19. I'm not going to enter at $19.99. The stop price is going to be, let me see, I think somebody else is trying to come in. Give me 1 second. There we go. All right. So I always wait to enter right after. So say this is $20. I always wait to enter at 20.01. And the reason being that because that $20 is a resistance level. So you want to kind of have the buying pressure behind you. So if you enter at 20.01, 2021, 2051, and then 76 is pretty much going to be the last one. It's the 0.76. Now it will make sense once I pull my chart for you to see. And the opposite is also going to be for if you shorting or if you're doing puts. It's kind of like turn upside down, which is going to be the 0.99, 0.79, 0.49, or 0.24. And again, when you go into the bigger stocks like Amazon or more expensive stocks, they're all going to fall into the same thing because, and one thing that once we pull Thinkorswim, I'll pull it up and see, because if you look at the price axis, sometimes you don't really see that they have all these prices there, but once you zoom in, you're going to see all these fraction or decimals for the pricing as well. So I always wait for the second test of a major level. So if say that this right here, I'm going to use this example here. So if say this is $20 here. Let me see if I can do this here. All right, so say this is $20 and I'm trying to get in. I'm gonna wait and make sure, okay, hey, the first time it's gonna hit right here. There's a resistance we can't break. The second time, there's a resistance we can't break. If we can break this, I'm getting in right here at 20.01 to go up. But if we come back down, I'll wait. And if we hit again, this is what I'm talking about, your setup. So people that do the trading there, everybody has their setup. So you have your setup and say, okay, this way you're gonna get in. And once it breaks, you get in at this level. I use 4 EMA on the 5-minute chart, and also the 8 EMA on the daily. And I'll show you those charts as well. But on my 5-minute chart, I do have the 4 EMA and the 8 EMA. The 4 EMA, I find it to be like a momentum stock. When the stock is going up, it's always going to ride up on that 4 EMA. And when it's falling, when it's coming down, it's also going to do the same thing right below the 4 EMA. Let's see here, clean this out. Let's go next one. All right, so learn how to read the tape. Like I said earlier, the timing sales, the ECN level 2 and level 3. I use Thinkorswim to trade. I have TradingView for charting, but I'm not sure how to connect your TradingView to your broker's platform. But I use TD Ameritrade. I use Thinkorswim to trade. So that's what we're going. I know they have the level 2 and timing sales. With the ECN book. They also do have, let's see here, let me take this out so it doesn't keep. All right, so what I use, oh boy, I'm sorry, go back here. There we go. And always, when I'm planning my trading plan for the morning, I also look at the average true range of the stock, the underlying stock that I'm going to be trading. So say, looking at the average true range, I mean, you can find on so many different, it can be on Thinkorswim, you can find it might be like, say, $5 for that particular stock or $10. And that's something that they've averaged out for a certain, maybe it can be like a month or so that they come up with that true average true range. But what I normally do is like, say, if I'm using like the 8 EMA, which is average in 8 days, then what I'm going to do is I'll look at the high and low of each day of the candle and then average it out that way. Because, and the reason why I do that is you can find a stock like, say, we all know about AMD. It hasn't really moved the way we expected AMD to move. So it's been consolidating for a while. But then when you look at some books or when you look at some websites, I would tell you AMD average true range is probably going to be like $5 or so, right? But it has not moved. Well, say Microsoft has been, it had consolidated, I think, what, the end of last year, Microsoft was not moving. I think in a day, it probably was going to move like $2 or $1 something. But then when you look at the average true range of it, it probably will tell you like it's $6. So normally what I do is I just manually calculate my average true range. So I kind of know where my target is going to be and not to overshoot or undershoot. I use these called pivot points, called Camarilla pivot points, which calculate the intraday support and resistance level. This was made, it came up by a guy named John, what's his name? He was a bond trader. And he came out with these, man, kind of use Fibonacci's numbered levels as well. And he calculated in such a way that he came out, man, we're not going to go into detail with the calculations, but I mean, these pivots work like magnets when you use them. And then on top of that, I add Person's pivot. He's also another trader that came out with his own pivot levels as well. So the combination of the two with the 4 EMA and the 8 EMA works very good for that. This is some Maslow's learning stage, conscious competence theory. Pretty much, like I said, you know, when you start something, you want to be able to pick up a strategy that works for you, or a technical style, technical analysis style that works for you, or your style of trading, or something that you understand and you feel comfortable with when you back test, when you're trading and see, okay, hey, this is working. So you can stick to it. And it's just going to show you, I mean, the learning stages of conscious incompetence, which you do not really understand how to do something and does not recognize the deficit, or you just pretty much ignorant about it. Conscious incompetence, which does not understand but recognizes the deficit, or you are aware of what's going on, but every time you get on your desk. I mean, it happened to me when we first started doing all this, like, okay, what am I looking at? You can watch all the videos and whatnot, but then once you get in front of your computer to trade, you kind of freeze or you kind of get confused, trying to figure out what's going on. The conscious competence, at this point in time, you can understand how to do it, but you require a lot of concentration and a lot of learning. And then when you get to the final stage, which is some conscious competence, at this point in time, you have achieved that skill. It becomes a second nature. You can look at some of these stocks, or you can trade some of these stocks to the point where you kind of know how they move within certain time periods of the day or within a certain period of the month, or looking at your seasonality or whatever. You can, look at all those things and just be like, okay, hey, this stock is going to do Y and Z to do that, okay? All right, and one thing I also want to point out, this is pretty much for, this strategy is pretty much for day trading or swing trading, which can be a week, 2 or 3. And again, the way I do this, everybody's different, okay? I use this for whatever you shouldn't be using money that you think you cannot afford to day trade. We all know long term is going to win eventually. So that's where our main focus is. When I'm doing day trading, when I'm trading the SPY or SPS, which most of the time that's what I do, I use my proceeds to buy my long-term option contracts. So, hey, that's like I said, you have a plan, you have your target, you have your goal before you even get in the trade. So if I'm looking at a Tesla contract, if I'm looking at some SMH or some ARC contracts or whatever, and I say, okay, I have $500, and you know what? This thing is showing. I'm sorry. I think some people are waiting here. Review. Man, I really suck at this. I got to present more too. All right, sorry about that. So if you have, if I'm looking at a contract and it's going to cost about $2,500, and I have $500 that I think, okay, hey, I have very good setups today that I think I can make that $2,500 and put that money towards those long-term contracts, then that's what I'm going to do. So I have a goal in mind, because we all know that at the end of the day, the long-term is going to trump all these short-terms. When I swing trade, which pretty much I like, because say I haven't walked away yet, I'm getting closer. So sometimes, my job doesn't allow me to trade daily. So there are some setups that I just say, okay, hey, I'm going to swing this for the week. And if we all know how this first quarter did, if you hold on something overnight, there is no guarantee that you're going to wake up the next morning. And we got to meet this gentleman here. So there's no guarantee that you're going to wake up in the morning and your call is still going to be valid. The stock might plummet the next morning, or if you have some puts, you wake up the next morning, everything is going up. So you have to be very careful as to what you hold overnight. And the way I do that is I look for my setups where the stock closed very strong the previous day with high volume, if I'm doing calls. And then I'm like, okay, you know what? We might get that momentum to carry it over to the next day. Or if I'm going to downside, I'll pretty much do the same. And, at the same time, it's more accepting, inviting more risk, as Mark always would say, to your doorstep. And it's just about, hey, how much risk can you take, or what's your risk appetite, so to speak. So that's something that you have to be very careful about as well.
That's a fact.
So I think I'm ready for questions, and I'll pull up my chart as well, and we can jump on it and whatever questions you guys have. And this is pretty much my setup. Pull this up here.
Hello, Patrick.
Yes, go ahead.
So I missed most of your presentation because I was kind of outside the room. I heard at the end that you mentioned XPX. Is that something that any trader can trade? For background information, I use Thinkorswim platform.
Okay, yes. So you should be able to
trade.
yeah, can you see? So you can see my screen here. So this is the SPX. If you're doing options, if you do you use Thinkorswim, you have
It's still in the question
Can't,
section. Excuse me.
yeah, we can't see.
All right, can you hear me?
You just got to do a new share of your screen.
Oh, I got to do a new share. Oh, my bad. Sorry. Let me go back here. All right, can you see it? All right.
Yes.
So the lady that asked about SPX.
Yes, I can see.
All right, you can see now? Okay, all right. So SPX, so yes, you should, I mean, if you, now, everybody's different, okay? You can trade the SPX or you can trade the SPY.
Okay. I currently traded SPY, but I was interested in the XPX.
All right, so, and once I pull the premiums, you'll be able to see the reason. And again, like Mark always would say, depends on where your risk appetite is. Right?
Okay.
If the premiums for go back, sorry. All right, so the premiums for SPS is going to be more expensive than the SPY.
Okay.
Okay. As far as the daily range for SPS compared to the SPY, so the SPY might move, like say, $3 a day.
Yeah.
Or $2 a day. Okay. And when you compare that to the SPS can move anywhere. I mean, it can be $20 to $100 a day. All right. So now here's my strategy of picking my strike prices when it comes to this. Like I said, you look at the average true range of that particular stock that you want to trade or your underlying stock that you're trading. And say, all right, so last Friday, and I think it was Thursday, I didn't do that on Friday. So let's see, it was 390s. Let me go back to the chart real quick. All right, so this is I gotta move this thing out of my way. There we go. All right, so this on the 5 minute. All right. So we started here. Now it was. Oh, I'm sorry. I'm still on SPY. All right. So let's look at the SPY first. So if you're on the SPY and you go into your why did Mark show up here? That make me nervous.
I know. Hi, Mark.
Hey, y'all. Patrick, you're doing a phenomenal job, brother. Keep going.
All right. So if you look at the contract prices for SPS, all right. So say for Friday, the 400s it ended up being like $1.97. Okay. All right. We're just gonna say today is Monday, and we want to trade the SPY. So we're thinking, okay, hey, the SPY might move up to 405, right? The current contract price is going for 16 cents. So how many that you want to get, that's going to determine how much amount of money that you're going to spend for the day. All right, so that was 1, 2, 3, 4 out of the money. All right, so let's go to the SPX. So on the SPX, if you're looking at 4 out of the money, 1, 2, 3, 4, so that's going to give us about 435. You're going to pay $7.70 for that. So that's going to cost more compared to the SPY. Okay. Now, the way I do it, okay, depending on, like I say, my target, or depending on how the market condition is at that particular day. And if I feel like, okay, hey, I don't want to spend so much time sitting there looking at my computer all day, and I want to jump right in, I'm getting close to the money. And if I can afford this, if I'm getting 5 of them, that's going to cost you about what? $5,000, pretty much. Do you have that money that you want to risk on day trading? So that's what made me say, okay, you have to figure out where your risk appetite is. Okay. Is it something that you're going to need, or you're going to lose? If I'm looking at this and say, okay, I have $5,000 and my setup is really good, that I think I can double this money and go and buy me some Tesla contracts, then I have a strong conviction that it's going to happen, then okay, I'm going for it. So I get close to the money. But if I feel, okay, hey, I don't have $5,000 to spend today, but I have about, you know what, let me come out a little further out of the money to the 465s. Those are going for $1.30, $1.35, so to speak, right? You got how many people here? 290, yeah, almost 3,000 people here. And again, it goes by when I say you have to choose stuff that are more liquid. If you look at this bid-ask spread that I was talking about earlier, this is like what, 20 cent spread. When you go to the SPY, that 405 that we talked about is 3 cent spread. So you can easily get filled once you make your profit and you say, hey, I just want to get out. It's easy for you to sell it. Okay, compared to, like I said, the more expensive stocks tend to have a larger bid-ask spread. All right, so now there we go back.
I'm sorry, I have a quick question.
Yes, go for it.
Which expiration date were you looking at again? Because I'm trying to follow on the computer.
Oh, okay. So this one is on the 5th of April.
Okay, thank you.
It's going to be the next trading session. All right, so the other trades that I have is going to be a little bit out of the money. So let's say 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. It has, and I'm looking at the one with more open interest. So this one has closer to 3,000. This one has 3,400. Okay, so okay, you know, depending on how much money I want to spend, that's okay. I can afford this $1.35. I'll probably go in the mid and say, okay, I'll put in an offer for $1.20 and see if I get filled for 10 of those. Knowing that the reason I'm doing that is because I know, hey, the SPS, let me admit these people. I know that the SPS can move more than, where are we now? So at the money for 4,015, 50 points, there's possible that it can move for the day. And again, like I say, depend on my setup, depend on the volume for that day, depending on what's going on, how the general market is looking at. Sometimes I use this tick here. We're not even going to try and talk about it for now. That's way complicated. So I look at the general market breadth and decide, okay, hey, you know what? I think we're going to be able to get there. Now, as the day goes by, this $1.35, as it gets closer, of course, you know, you look at your deltas. So right here, my delta is 0.08. As the SPS get closer, you can tell like 2 out of the money to 40.25, the delta is 0.45. As it comes closer to mine, this is not going to be 0.08. It's going to start going up. Okay, so even though I paid $1, say $1.35, it's going to come a point in time when it starts getting closer, and because it's also liquid, this $1.35 is going to end up being about $3 or $4. Okay, so even though I spend $1.35 compared to somebody that spent, say, $1 for the SP for the SPY, So say here, you got close to the money, or 1, 2, 3, 4. You were going for say the 404, and you pay $1.28, and I pay $1.35. I'm gonna end up making more money than what you did before you trading the SPY, if that makes sense. Because the SPY only moved what, like say $3 for you to be in the money. And compared to my SPS, I'm gonna make more money than you. So that's the reason why I traded both for a while to kind of see where the profit is. And then I decided, okay, hey, the SPS is a little bit more riskier and you put up a lot more money than playing the SPY. And then again, I mean, you can go further down. I'm sorry, let me go back here. You can go further out, you know, do 3 months call, whatever, you know, however you want to go about it, it's all up to you, if that makes sense. All right, so now I'm going to jump to the chart that I was talking about as far as the trades that I've been using. And all these here, I mean, I know it looks, when I first started looking at it, when I first was introduced to this, I was like, man, this is a lot of lines, because I like stuff to be very clean. And there's another strategy too that is very clean. There is no, and I think I mentioned the other day when they were doing called the strat. That's going to be another day. I did not add that to it. So another day we'll kind of go over it, which is very simple looking. It's a little bit complicated, but once you get it, and it works as well. You can do that for day trading, and you can do that for a swing as well. All right, so so here, the ones that look like a bubble, let me see if I can expand it some more. All right, so these ones here with little bubble circle thing, those are the person pivots. And the straight line ones, the green ones, and the red straight line, those are the Camarilla pivot points. And they all have different levels. So when I get in the trade, and it's funny how, like I said, it's amazing how these pivot points work. And especially like when you get sandwiched between the two pivot points, the Camarilla and the person's pivots, it's very hard for the stock to go through. You can tell by looking at this spot that I pulled this day. It started here and it went all the way. And by the way, the moving averages that I have here, this is the 4 EMA and the 8 EMA is what I use. And as you can tell, this SPY just rode along both the 4 EMA and the 8 EMA all day long. But then when they got into this range, you saw how they kind of consolidated pretty much for all day, right? They could not get through these pivot points. And it's not just because of any mathematical reason, these pivot points is just there and they can't get through. And it's just because how they have the computers programmed, because that's where they sell. So the market makers have it programmed where even though the stock is consolidating, they selling within that. We can't see it within the naked eyes on here, but you can see it on the prints that are coming in that, hey, they're selling. But of course, they're not going to sell it in big balls, because then you're going to get all these big drops. Maybe probably somewhere here, they turn the computers on here to sell at that point in time. But most of the time, they're going to consolidate and they will sell in batches. They might sell like 1,000, 5,000, 1,000, 5,000, to the point where you're really not going to see the big moves until they're done selling. Okay, and like I said earlier, we look at the ECM book. When you look at, you will find that you will see JP Morgan, you see Goldman Sachs, Barclays is going to be there. All those big market makers, they're going to be there selling, depending on who is selling or how much they have to sell. If they're not finished selling, the SPY is not going to move past this level. It can be 2-3 days. And there are times where you see, hey, the SPY might be like 398, 397, 390. Within that range, that's what they said. And they set this up ahead of time. And when you're looking at the block trades, you can tell where they're coming in with those big volumes, and you know that's where they're going to be around that range. So then what I also do is, like I said, this is a 5 minute. I've made these 2 people. This is the 5 minute. You can go to 15 minute and it still will work. Okay. And I always look at multiple time frames. I don't just look at my 5 minute, because always the larger time frame is what's going to tell you the whole picture. On the right side here, where I have marked, it's my daily chart. I'm going to slide this down here. The daily chart looked like spaghetti. When I first started, when I was first introduced to it, I'm like, you know what, I really don't like, I want my chart to look clean. But y'all, it's amazing how these moving averages work. And of course, because it's called a moving average, over time it's going to move. But when you look at a stock, like say right here, if you come to the left side, there's no pivot point, there's no, what am I trying to say? Let me get this person. Okay. There's no resistance here. So you're trying to figure, okay, why is it not going up, right? But most of the time when you come here and look on your daily chart, you're going to realize that, okay, hey, it's stuck in the middle of 2 moving averages. So it's stuck in 3 moving averages. Like let's pull up Tesla the other day.
I have a quick question about the moving averages.
Yes, go for it.
You use the 4 and the 8 because I hear different people and they use different things. Is it just more of a matter of preference,
It's
or
just
what
more
you
of a
find
matter
that
of,
works for you?
it's more of a matter of preference. And like I said, I've tried so many different ones. And
Okay.
I mean, just look at this Tesla chart that I have on here. It is riding right along this EMAs. I mean, just like a choo-choo train.
Okay, thank you.
Every time, I mean, it might pull a little bit away from the 8, but then it'll retrace back to the 8 as well. I mean, you can look at, this is 2 different trading days, right? So Tesla started from here. It pulled away, right? And as it pulled away, let me expand this a little bit here. I did too much. All right. So Tesla came up here and it went through. I mean, and another thing too is when you trade in Tesla, Tesla is a whole different, as we all know. Okay, it doesn't obey to all the rules like most of the other stock does. So look, it came all the way down when we opened. It went up here to the first support, the second support of the Camarilla. And I don't have the labels. I mean, when you go in Thinkorswim, they have the labels. I'm used to them now, but you can label them and say, okay, this is support 1, support 2, 3, 4, and these are resistance ones, but I don't label them. But when we opened, Tesla came right up here to this support line, right? Came all the way down. And like I said, they have these, look at where it stopped. This Camarilla is right at, it stopped right at 59.01. And if you go back into the PowerPoint, as I use those levels, the 0.01, the 0.2, when it got right there, they stopped buying it. The computers are programmed to buy right there. So then it started rallying up. It came all the way up, and look at where it stopped again, right on that Camarilla, 0.75. It went through. You remember on the thing I have 0.76. So if I'm taking profit, if I'm playing Tesla from here and I got in, say on this candle, the second candle, and I'm riding, I know, hey, okay, my 4 EMAs above my 8, so I'm good. I'm going. Okay, and I see that 4 pulling away from the 8, because the 8 is a little bit slower than the 4. Like I said, the 4 is like the mad train coming at you, right? So, okay, we're going. And now, okay, Tesla just And here's my thought process when this is happening. This is on the 30-minute, okay? So if I come down to the 5-minute, but if I'm looking at the 30-minute chart, I'm taking profits depending on the number of contracts that I have. I'm taking profits as I go along, okay? Tesla came down to 590, and now I'm right here in the middle. That's what, 615. The $10 move on the Tesla premium, that's a big change that you're going to get for that day. So if I'm up here, I'm probably going to reduce my size and take some profit, because I don't know if I'm going to be able to get through these, because I don't know how much selling pressure that is here, how much stocks that they programmed to sell at this point. So if I can't get through it, guess what? At least I know I took some profit. Okay, we're going to go back up. Tesla say, hey, I'm still going, right? It broke through this. Now I'm looking here, okay, it's getting far away from the 4 EMA. So it's going to start retrace back to the 4 EMA at some point. Like I said, they act like magnets. Okay. Now, if I come here, this was, what day was this here? All right. So if you come over to the right side on, it was right here. So when Tesla opened up, and you can tell this moving average here, this is the 4 moving average, the 4 EMA on the daily, right? So it's moving right along on top of that, just like it's moving here. All right, and then when it got up here, it went through this 165 SMA. I have that on the chart as well. So let me pull my thing here so you can see what I have. So I have the 4 EMA, I have the pivot points, I have the 161 moving average, which is just a simple move. That's another EMA, sorry. And then the 8 EMA, and then the Camarilla points. And then I use this TTM squeeze, which is also at the bottom, to kind of gauge my magnitude. And you can tell as it's going up, you can see the histogram started going up. And then you can look at also the volume numbers on the side here. And again, like I said, every indicator or every strategy that you come across, volume is always going to be the key for you. Because if you look at these volume right here that we started, okay, this came down, then this volume was higher than the previous one. So Tesla was going, it kept going, even though these two were lesser than the previous one. That's when, okay, I'm looking at, okay, well now we're starting to slow down. If I have to draw a line up here, right, you can tell it, okay, now the volume is decreasing. And again, you know, when the market opens, just like the floodgate, everybody just making their transactions. So over time, it's going to die down. So that's why I said, okay, if you really want to know the direction of the market, how it's going to be, I enter 15, 20 minutes later. Once I know the direction, that's when I get in. All right, so like I was showing you guys, the Camarilla, that's where they bought. Tesla went all the way through here. And then once it got to the 635.75, again, if you look back to the PowerPoint, I have that 0.76. That's my last point that I'm going to take my profits. All right, so this one got all the way up to, let's see, what was the high? High was 63.55 on this candle. So right here, they started selling. You can see this big wick bringing Tesla back down. And then from then on, and you see how it came right back and touched that 4 EMA. Then it broke through the 4 EMA. It started riding along. Here we go again. And then we went into the closing. All right, so let's move on to the next day. Any questions? Comments? Mark?
Sorry?
I say, any comments?
Oh, I sent you a message
Oh, you did?
when you were doing your presentation. I said that when you
Oh.
get to the resistance point and when you see it drop from the resistance, can you use those as buying entry points from when you hit that support level and then heading back up to the resistance?
Yes, so that's exactly right. So like so I showed that on my previous slide, going short and then going long. So once it hits those pivot points, I know, especially like say right here, well, this is showing, okay, let me go back to where we were previously. Let me let these people in. I'm getting good at this one now.
I just want to let you know, Patrick, you did a phenomenal job. I'm super proud.
Thank you, sir. Thank you. All right, so where were we? Let's put it back this way. All right, I think it was this one that we were looking at. All right, so like what Mark just mentioned, right? So if you come right here, if you want to play both sides, okay? You're coming right here and then you hit this pivot point. You know there's going to be a selling pressure here. So you can prepare yourself. And as soon as you get here, and like I said with Tesla, the way it was going through, and I remember this day because I was trading, the way it was going through, I was so excited and so pumped up that I forgot to trade it back down. Okay, because I was more like, okay, let me just take my money and get out of here. But you can easily do some puts and write it back down. Okay, and again, once we hit right here, and you can, if you look at the wicks, how the wicks come right on top of these pivot points, that's what made me a believer when I started trading with this strategy. Because you look at the VIX, it keeps coming, and when it stops right on it. If it gets through one and it gets to the other, it's going to stop around it again, and then it ticks right off. And again, like I said, if I'm looking at like on the short side, you can tell how it came below the 4 EMA and the 8 EMA. That's when you know, okay, hey, do I need to get in? That's a short, or do I need? And this is on the 30 minute, this on the 15 minutes. So you're talking about an hour and a half for you to make this move from 6:30 all the way to 6:18 on a Tesla contract. That was not bad. And if you want to turn right back around, or unless, hey, maybe you didn't take your profits here, then you got lucky, and then turn around on this day. All right. And on this particular day, and I think this was the day that, let's see if the SVS did the same thing too. It was a day that it had that strong closing. This is the day that it had a strong closing because it was selling off, and then boom, we just went up. All right, so any questions before I move on? I was going to go on to the ECM books to kind of show how I use that to gauge where the stock is moving. And if you use Thinkorswim, the easy way to do that, let me erase this here. Some people might know, some might not, but if you go onto the right side to the active trader tab and you click on that, That's going to pull this here and also your level 2. I'm going to move this to this corner. All right, I'm going to bring this down so we can.
Hey, Pastor, can you check the see if there's anybody in the waiting room?
There's no, I think I let the last person in.
Okay, thank
I'm
you.
getting good at this, man.
It's a lot. It's hard work.
It is. It's like my eyes are not going on to that. I have it on top of my screen too. All right. So the way to put to set up your ECN, and then you have your let me bring the timing sales as well. But if the market was open, you would see right here on the right hand side, you're gonna have your timing sales where it's gonna be moving real fast for all the sales that have been completed. They're gonna be coming through the timing sales. So I have my charts. Either I have my 15 minute on the left side, the daily in the middle, I have my time and sales here, my ECM book, and then this is where you can make your entry. So you know how on Thinkorswim, if you want to trade, which again, sometimes to depend on how fast, like say when Tesla is moving and you're trying to jump in right away, it's like a lot of process to come to trade, come to the option chain, look for what you want to get before you get in, and then, okay, you're going to hit confirm and you're going to go through all that, right? But if you go right here onto, if you have your active trader tab open, your level 2 and your ECM book, on the left side, you're going to see your left side is going to be the bid and your right side is going to be the ask. These are on the ECM book is what they show in contracts that have not been fulfilled yet. These are contracts that are sitting there. These are not the market order. These are the contracts, like say you and I seeing a limit order. It's sitting here waiting to be filled. So you're going to see your ask is going to be here. Your bid is going to be here. Sorry, y'all. And your timing sales is going to be on your right hand side. Now, you can, so if market was open, you're going to see these numbers keep going up and down, right? So say you want to trade the SPY, say you want to get in at 401. Say the SPY is trading at 395 and you want to do your strike price for 401. Up here, the way, let me see how this one is set up because I think I changed. We trade options, so most of the time you're going to need your the buy market, the sell market, your buy ask. You're going to add that to the right. Where's your sell ask? All right, so your sell bid is going to be there. You can move this up. All right, let me hit OK. All right, you can expand it this way. You can go in here too and change the quantity size that you want, the quantity of buying. Either you can move them away or you can change it because unless you, hey, if your account size is huge and you trade 100 contracts, but if not, I mean, you can always change this to like say 10 contracts. I always leave my auto send off. And the reason why I do that is you do not want to, because once you click here, it automatically going to send your order. So you don't want to send anything, you don't want to buy something by mistake because maybe you're moving your mouse and you end up clicking sell and you don't plan on selling. Because as soon as you do that, it's going to send it. So I always just leave this auto off. The template you have also your buy orders, you can do with brackets. Your market on close. Let's go back here. I'm trying to see some of the things that I add on. Pretty much just use these two. If you want to buy market, it's quick to just click this button. If you want to sell market, if something going down and you want to get out quick, hey, sell market, then you can get out, because you never know. Once you try to do a limit order, it might keep going down. I think it's happened to all of us before. If you day trade before, you want to get out quick, you can just go ahead and just do your sell market. But like I said, so the way I'm going to do it, since the market is not open, let me see if we can do an on-demand and kind of see how it moves on the live. It's going to be a little bit delayed when you do on-demand, but this is how you can also back test your strategy. And you can even back test on the leaves that we do for long term. So let me click on it here. And it says, okay. I'm going to move this away. All right, so once you do that, you're going to see your on-demand going to move from here to here, right? And if you look at the date, it has November 3rd, 2020. So you can change the date, and we go March to the, let's say, Friday. We can set this on 9:30, 9:32, and we'll say go. All right, so let me bring this down. All right, so when you change that, it's gonna default your chart to that particular date. So you can still have your chart up just like you were trading that day.
Wait, are you trading the options or are you trading the shares?
Trading options.
I think you have to change the contract.
Yeah, that's why. So like I did this one here, I put 10. So all right, so let me go back. I'm gonna admit this person. I'll show you what it's gonna. So you see how these are coming in. So if you want to do the one I was showing you where you went to your trade tab to go into your option chain. So now you can see all these are moving because it looks like we're live on that particular day. So say if you want to trade, I think we said a 401. All right, so you're gonna click on the ask, right click on the ask, and you're gonna copy. So we're gonna copy this particular strike price, which is a 401. Okay, we're gonna copy that. And we're gonna pick, you're gonna right click, and once you copy, you're gonna send that to, say, we'll pick the purple. All right, so now when you come back to trust, sorry, bear with me, I gotta keep moving this slide up the top of my chart. All right. So you can come back into this chart that I have here and link, since I had it linked to the purple. All right, so I got one here. Let me go back in, I did something wrong. All right, right click. Send to purple. There we go. This is not showing. So this is supposed to be the option chart. Let me go back here because it's not showing. So it's showing here. I send it over. So this is showing the SPY 20, 405. Yeah, because it's showing. Let me go back again.
Will it allow you to pull it up on the left side too, or no?
I'm sorry, say it again.
Will it allow you to pull it up on the left side?
On the left side as to where, like here?
Yeah, on the other chart on the other side. To select the
Oh, I see what you're saying. Like say do on this one. Now, kind of, yeah, you can do it on this side too, but I wanted to do it where it would show everything on the right side because
to have all the readings over there. Gotcha.
Yeah, so now it's showing. I don't know what was happening. I guess I might have double clicked or something, but now it's showing you the option chart itself, right? So you can look at it and say, okay, hey, SPY is here by the time that you pull it up, and this is where you want to get in. The price is going for 0.12, and that's where you're going to get in, right? So you have the contra price. So it's showing you the strike price of 405, and these are the contra prices, right? So you're looking at, all right, so from here, you get, this is 0.50. Right now, the option is current. So this is going like, say, it's happening live, right? So this is where it is right now. Maybe you want it to come down before you get in. You want it to come down to 0.45, 45 cents for you to get in. Or you want to get in right here. We can just go ahead and change this. So like you can tell this numbers here has changed, right? So the quantity size has changed from like say buying the actual shares for 100 or 200. So now, since we copied the option chain here, it's showing, okay, 135.20. So if you want to do, let me cancel this. So say if you want to do 10 contracts, so we have 10 contracts here, and we want to, now it has moved to 52 cents. If we want to do it on 52 cents, we can put it right here, confirm, and then we got filled. So it's that quick to do it here compared to going here, going to the trade, picking up your strike and coming here. I feel like it's much quicker. I mean, the more you do, the frequent you do it, it becomes like, some people have hotkeys. I don't use a hotkey. I just use my mouse because I still want to know how many contracts I'm sending. I don't want to make a mistake. I don't want to click on something that I don't need to, but there are some hotkeys that you can use as well, especially like people that buy and sell the shares instead of doing options. It's very easy to do that as well. All right, and then if you want to sell, say we bought this, we still have 52, it hasn't really moved up. If you want to sell, you can come here and say, okay, hey, are they going to fit? And here's another thing too. You can see here they have what, 209 sell orders sitting here. They have 222, 2,213. Now it went down. So what I'm looking at most of the time is if I'm trying to get in, or say if I'm trying to sell, let's say if you're trying to sell, I'm looking at this ask side and see how many contracts that they have here that hasn't been filled yet compared to the ones here. At this point in time, the bid side is winning because if you look at these contracts that are sitting here, they're bigger than this side. So it gives me hope that, okay, hey, this side, there's more buying power on the left side, on the bid side, that's gonna prop the stock up, right? And again, like I was showing previously on the presentation, I was saying the market makers have a certain level that they set to sell. Until they're done selling, that stock is not gonna go anywhere. So this person is showing 1,300, almost, yeah, 1,365. Sometimes it might not be, or they can put, you might see something saying 20,000. If I see 20,000, it might scare me because I'm like, hey, If they got 20,000 shares to sell, then that means I'm just going to sit here and they're going to keep chopping this out because we're not going to go past this resistance, because that you're looking at that as your resistance level. And then you look at the ones that are also here, right? How many orders that they have put in that they want to sell. And then you look at your timing sales and see, okay, what is coming through? What's going to come through the timing sales is what has been fulfilled. And now this one is, like I said, when you do on demand, it doesn't really give you the true picture. But when you live, you will see a ton of numbers just coming through with the price action coming through. When you see the green, if you're going on the call side, you want to see more green coming through, because anytime something comes in that is a penny more than the previous buy or the previous sale, it's going to show green. But then if it's more selling, then it's going to keep showing less, because, hey, the amount what they're selling, the price keep going down, so then it's going to start showing red. Does that make sense? Another thing too that they normally do, and I guess also, hey, it's just every trick in the book that they can use to scare us, the retail traders. They have something that people call a spoofing. They will put, like I said, they will come put that 20,000 or whatever. Or if you're looking at your timing sales and it's coming through, you will see that they will be refreshing, especially now on Thinkorswim, you can only see up to the level 2. You can I think they sell it for $15 a month. It's called the NASDAQ book. You can call Thinkorswim and they can add it to, which is a level 3, which shows you a little more than what the level 2 is going to show you. So they have more size on there. Now, when you're looking at that one, it's something that they call refreshing. Again, like I said, when I was doing the presentation, they're not going to sell all at once, because then that's going to drop the market, right? So they're going to gradually keep selling. So here it might show, say, 90, 50 here. And this 50 might go, and then this NASDAQ person might come back with another 50. It will go away and come back for another 50. All they're doing is just refreshing what they're selling, because they don't want to sell in bulk to freak people out. So they'll come back and keep selling until they're done before the thing moves. But other than that, it's just going to keep staying there until they're done selling. But like I said, most of the time you want to look at the bid side. If you're doing a call, if you're doing a put, then hey, okay, you want to look on the ask side, because guess what? They're selling more, so the price is going to keep coming down. And it's just a matter of who is winning at that point, or who is in control of the market at that point. So using, let's see if somebody's waiting. No. All right, so using this feature to get your entries in quicker. And like you saw how as soon as I put it in, all right, so now the thing went up to 53 cents. So I'm just going to sell. And it's showing me that I bought 10 contracts, right? So once I highlight on the price that I want to do, it tells you how many contracts that I have that I want to sell. But if I don't want to sell all 10 contracts, and say I want to sell maybe 5. Now it's at 53. I'm just going to limit this to 5. It came back down to 52. So I'll just put it on. All right, I'll just go ahead and sell 5 and see if it gets filled. And because, all right, so we got filled. I think we bought it at 51 or 52. So pretty much didn't make any profit there. But eventually that's what it's going to do, because once this moves up, you're going to see, okay, hey, now your premium has gone up. Do you want to sell it here? You go ahead and sell it. Now, if you want to do a limit order and put it here, anticipating that, okay, it's going to come through. Now, you can also tell that on my option chart, I still have these moving averages on there, right? And you can tell how it's just sticking to this 4 EMA, like it's not moving. Since we've been talking, it's been sitting right here at that 52, and it's not going past it. until they're done selling, it's not going to move past it. I mean, if it's enough buying pressure coming in, then yeah, that's going to move it up a little bit, or it can get through it. But other than that, I mean, you're just gonna, let me admit these people. All right, so any questions on this? And again, it's something that over time, you're gonna train your eyes to, because you see it constantly all the time. And like I said, the speed, you're gonna get used to the speed. It's gonna start slowing down. This being on demand, I mean, we can pause it. But during live section, I mean, it's just going so fast that, but over time, you know, you keep it helps. I mean, it helps a whole lot seeing where the orders are coming in and seeing, okay, hey, I'm right here. I'm coming up to a resistance here. I'm coming up to one of these pivot points, and I don't see the price moving that much. Is it going to fall down? Okay, do I need to take profit? You can use this in conjunction with your chart and just, okay, let me go ahead and take profit around this area, because guess what? It's not going past it, right? And then 12 o'clock comes, then it drops. And another thing I forgot too is if you paid attention to the trend of the day, like I was saying, I enter after 9:45, 9:50 is when I normally enter. I try to limit myself to say by 11:15, 11:30, either I'm out if I'm day trading, because I might take some of my profit and leave some for power hour, which is going to be like, say, after 2 o'clock. Between 11:30 and 1 o'clock, 1:30, most stocks is really not going to do anything, especially if you have contracts, option contracts. They're just going to kill you, because at that time, all they're doing is, I call it the minion time. They leave it, you know, the suits go to lunch at that time. And reading this book that I'm talking about with Jesse Livermore and all that, pretty much that's what they were doing. So at lunchtime, these market makers, you know, they go to lunch, and then they have not the assistants, but interns. Say the interns that I learned, and they tell, okay, hey, do this, just put people out, just stop people out. Because once we put in our stops, they know where all our stops are. So if you pay, I mean, from now on, just pay. If you already know, that's fine. But if you don't know, just start paying attention to it. After 11:30 going, or after 11 o'clock, things start slowing down. And then it looks like, if you're sitting there watching your stock, it looks like, okay, hey, it's getting ready to go up. Oh, come on. All right, so let me use this example here. This is 11 o'clock, right? So we started in the morning, 9:30 bell open. Okay, we came down, we rallied back up. Now it's 10:30, and now 10:45, okay, 11. I mean, look at the activity here from 11. Nothing really happened. Drop down, come up, drop down, come down. And then guess what? 2 o'clock comes, then we move up. If you pull so many charts and you start reviewing, you're going to be able to find a trend that from between 11 and 1, some starts between 11 and 2. There are some days that it can just be from 11 to almost like 3 o'clock. Nothing really happened, just chopping up, and then things will start moving. So especially trading options, I mean, if you have something better to do, I normally just set my alerts where I anticipate or where my target is. If it gets there, that's fine. It will alert me. Or after 3 o'clock, I'll just kind of sit on my computer and look at it. But if I have something to do, if I got to go work out, I just get up and go work out. You know, just something to clear your mind so you're not constantly focused on what you do, because that's where you end up making mistakes. You get stressed out, because these minions, all they're doing is just stressing the hell out of you at this point in time. Okay, especially like on a Friday. And you sitting there, nothing is happening, and you thinking about your premium. I mean, fear is going to kill you. That's pretty much what's going to happen. All right, let me see if we can sell this 5. So I'm just going to do another 5 or 5. And sometimes that's what I also do. If I know, hey, okay, I'm going to get up, but the stock hasn't reached my target, I'll look at where the stock is going to go. I look at the ECM book. If I don't see a whole lot of sellers there and I see more buyers, but it hasn't been moved, I know that, okay, they're going through the minion time, so nothing really is going to happen. I can set my limits in levels. All right, so say I bought it at 52 cents. I can say, okay, hey, if it gets to $1, I want to sell 5 here. Okay, then I put the order in. If I get to, depending on how many contracts you have. So say if you have 50 contracts, you can set those levels and say, okay, if it gets there, you're going to reduce, you're going to, scale out 10 contracts, 15 contracts. So in that case, you're not sitting there staring at your computer all day. So you might get an alert that, okay, hey, 5 has been sold, or 10 has been sold, or 15 has been fulfilled. And then you can leave at this. So at this time, you pretty much, like I said earlier, see profit, take profit, right? Once you take profit, it's going to make you happy. I mean, even though it might not be the big profit that you're looking for, if you take half of it, it just feels good within your soul that, okay, hey, you're not at a loss. Or even if the money that you put in, if you put 500 in and now you took profit of $600 and you got four contracts left, that 4 contracts that is running, those are just on the house or house money, right? So if you lose those 4, at least you made $100, so you broke even. The other 4 can go and maybe, hey, towards the power hour, you can come and wait. Come and sit by your computer and then manually do it or manually sell at that point in time. And one thing that happened to me recently, and I'm not sure if it has happened to anybody, which is a good piece of advice to pass on, okay? I didn't lose money on it, but I was pissed off. So last week when Microsoft news came up, I did get, let me go and admit this person. I got a Twitter alert. Is this, and I'll put all these resources in the comments as well later before we end. And got a tweet right away about a Microsoft deal. So I went right ahead and jumped on and got some contracts. And I think it was a Thursday. So he moved. I was able to sell, I'll say 1/4 of the position. Sold it right away because it kind of did a pop and drop right, within like 5-10 minutes. So I left the other contracts. I'm like, okay, hey, that time was kind of closer to end. So by the time most of these institutions are not going to just get in on the trade on the jump like that. Either they have their research, they know what's going to happen, so they're already in. And if the news came out of nowhere, they're going to come back the next day, or they're going to reevaluate their portfolio or look at, how much good of the news that it's going to be or how much profit they can make out of it. And then the next day, they're going to take a position. So I was like, okay, I'm just going to leave some of that contracts. And on Friday, hopefully Microsoft will move. So yeah, in the morning, it did move. I sold some of it and then left some for power hour because it wasn't going. And I was looking at where it was, Microsoft was sitting. Let me see if I can pull it up. All right, so this is Friday. All right, so you can tell the previous day when the news, so this is where Microsoft was before the news came. All right, so we were trading right around here and the news came, so I probably got in maybe right about 233 and it went boom all the way up here. So I took profit, at 236. So after hours, it did what it had to do. Pre-market, noticed that, okay, it was trading, the highest that it traded pre-market was about 236. So it really wasn't that much of how it closed. And then right before the market opened, I saw this huge candle come up. because I think I was on the 30-minute, I was on the 15-minute chart. So it came out, I was like, okay, right at the open, I'm gonna have to sell some because once it does that, it might drop. And sure enough, I sold somebody open and then it dropped. So once it dropped, it came all the way down. I'm like, I don't like, the price that it was going for at that time. So I waited. It started creeping up again. Look at what this time is, 11 o'clock right here. Nothing good happened. And this is on a Friday, right? So 12:30, it started making the move. And the move it made really wasn't that much. I mean, from 233 to 234. I mean, it was less than $1. And then it moved up here. I put in the limit order to sell. I think it was going for about $2 at that time. It didn't fill. And then it came up here. So I got filled to run up here. And then it dropped again. I'm like, should have taken my profit again? Like I said, see profit, take profit. So I'm sitting here sweating because this is a Friday and the option is going to expire. So right here, I'm like, okay, it looks like it's going to come back. As soon as I saw this selling pressure and then it came right here, I was like, maybe minor because it went through this moving average. I'm like, okay, they're going to sell off into closing, people taking profit. So I was going back in to change my my limit that I had put in to sell. I think it was like 230 or something like that. So I was going to adjust my price and just sell it. I wasn't going to lose, but I was just going to sell it low. I think it was going to be like $1.65. But then guess what happened? I went into my platform, went into the contract, and it was canceled, and the contract was sold. So I called my wife. I'm like, yo, did you sell these contracts? And she's like, no. I'm like, are you sure? So I said, I know I didn't sell the contract because I left, I think it was about 30 of them left. I know I didn't sell them. So I went back and looked at the transaction history. The system canceled my limit order that I had put in. It canceled it and then sold sold my contracts for a cheaper price. And at this time so I called, it was Fidelity. It wasn't an IRA account. So I called them and I'm all hot, just fussing at the guy. The first person I got in touch with, he doesn't do trading. So he had to transfer me to their trading desk to talk to somebody. At this point, I see this turning. They sold it at 155. It went all the way up to like 340. And this is right before close, like 350. So, of course, they had sold it, liquidated it, but I couldn't do anything. But I wanted to find out what happened. And it can happen to any of us. So because of the size of the contract, this is the explanation they gave me. I'm sure you probably heard about exercising your option contracts or being assigned. They were worried that I was going to be assigned the contract because at that point it was in the money, right? Because I think my strike price was 230 when that news came on that day. So the stock is trading around 235, 236. So I was already in the money, but I was trying to milk my premium, right? So they were worried that, or they have the system programmed that, hey, okay, it's getting close. The option is going to expire today. It's getting closer to the end of the day. If we don't sell these contracts and it gets assigned, you're talking about, 30, 50 contracts times 234,000, it's like $700 and something thousand that you would be assigned. I didn't have that money in the account, so they went ahead and sold it. So that's something that you have to, hey, I experienced that. I never experienced that before. I've done this since we started trading. To the wire sometimes because power hours when stuff moves and then sell it right into closing. But nothing like this. I was furious. When they explained it to me, but later on I went back and read on it. It makes sense. They do that, with the fear that you might get assigned and you don't have that much money in the account to cover it. So just keep that in mind. If it happens to you, if you're holding your contracts towards expiration, You might depend on the broker that you're using or the platform that you're using. I mean, I'm sure they all have it, you know, so not just Fidelity. Most of the time I trade with E-Trade and TD. Like I said, this being an IRA account, I really didn't pay much attention to that. So if I was losing, guess what? That would even be worse. But even though I still made, because I got those contracts, I think when it first came, I got in like 38 cents, something like that, you know. And again, hey, we all get greedy sometimes. It got to $2 and I was still holding on to it, hoping to get, because I knew that, okay, hey, it's not coming down because it wasn't going past this moving average here. So eventually it's going to come back up during closing. That's how your setup is. Once you trust your setup, you know it's going to come back up. But it was just too close to call. And, you know, so they catch me out. So just in case you come up, you know, just know that it can happen to you as well. All right. Any questions? I know I've been talking a lot. Questions, suggestions, everything is welcome. And again, I'm sorry.
Hey Patrick,
go
thanks
ahead.
for the presentation. I had a few questions. So how advantageous is the 4 and 8 EMA compared to the 5 or the 9 or even the 10-day EMA that you see that some day traders use for the short term?
So I used to trade on the 9 and the 21, and seemed like I was always getting my entries and my exits were not as accurate. Oh yeah, they just sold my contracts. My entries and exits were not right on time, and either I always feel like I left money on the table. So a friend of mine that used to work for a brokerage firm or was a professional trader before, he mentioned this thing to me. So I started playing around with it. I did a lot of paper trading, and again, kind of using the tick indicator, which I'm gonna do it. I'll try and do another presentation now that my wife is retired. She will help me put together a lot of presentations now, but I will be talking about this as well. Yeah, I got Miss Crystal too. Shout out to Miss Crystal here in the crowd. But using you find that most indicators are lagging. Okay, if you want to look at it that way. So that's why I kept stressing like volume should be one of the indicators that you should be looking at. There's another one called advanced decline line. It's kind of like the tick as well. We'll go over it. I mean, if you want to read up on it, hey, I'm sure it probably got a lot of videos on it on YouTube too. These are more not as lagging as your moving averages and your RSI, your MACDs. There's plenty of times that you go back, and it's so much easy for anybody to teach you or come on YouTube and tell you, hey, how these moving averages work and how great they work. Because anybody can go back, and I can go back and say, hey, you know what? Yeah, this candle came down and I would have gotten that right here before it did it. You don't know how the candle is going to form, right? There is another strategy called the strat, which I think I mentioned the other time that we had the session, which I can go over. It's not a lot of information on it. I was going to put into this, but I'm like, okay, this is a totally different strategy. So I'll present the strategy and then go back to the strat. With the strat, you can see how the candle, so you can anticipate the formation of the candle, which way it's going to go. They kind of number the candles like, you know, they have, I'm sorry, not to digress from that, but it's such a
the 2-1-2 reversal.
Right, it's such a phenomenal concept. So like, all right, so it's only 3 scenarios that can happen, right, with each candle. So you have the scenario 1, which is going to be a candle bar that is, let's see where I can finally go to a 5-minute. So as smallest candle within your, can you see the screen? Let me make it a little bigger. All right, so this right here, this red candle here, is going to be a scenario 1, which is a 1. And the reason why it's a 1, let me see, it might not be a good one. No, that's not a good one. So a scenario, let me explain it. A one candle is going to be a candle that could not take the previous high. So say if this was scenario 1, I'm just going to use, pretend this is a scenario 1 candle. It couldn't take the previous high of the previous candle, and it couldn't take the previous low of that candle. So it's kind of stuck inside the range of the previous candle. That would be a scenario 1 candle. All right. And
Is
then
that referred to the inside bar?
say it again.
Is that referred to like the inside bar?
That is considered an inside bar, correct. So a scenario 2 is going to be, this will be a good scenario 2. This next bar, this green bar here, and if you look at scenario 2, is going to be the one that was able to take out either one side of the previous candle, whether it's to the upside or the downside. So this one took the high of this previous candle, right? The high of this previous candle was 233.41. And this one, high of this one is 233.53. But in the low of this candle was 233.07. And the low of this one was 233.11. So it couldn't take out, so it took out the high of this, but it couldn't take out the low. So that will make this a scenario 2. And then you have a scenario 3, which is the mother bar, or which is the biggest candle that you will find. So not every big candle is like, this candle is not a scenario 3. This candle right here is a scenario 3 candle. All right, so this is what it did. It took, this is the previous candle to that, right? So it's able to take away the previous high, and it took away the previous low. So that made this a 3 bar, or an outside bar, or a mother bar. It's so many different terms that goes into that. It's a very exciting. When you look at the chart of that, let me see something. See, I didn't want to go there. Now you got me all excited. The guy that developed this strategy, his name is Rob Smith, Smith in the Black, with the Strat family. I was in that trading room last year, somewhere around August, September to the end. But it's like I said, it's a simple concept, but it's like he didn't have enough resources on it to use it. I must find. All right, so I'm gonna share my. All right, can y'all see my screen? All right, so I use, when I trade that, I use TradingView. They have setups for Thinkorswim as well. You have the scripts that you can use for Thinkorswim. But TradingView is a lady in there that already had the script, which is free. You don't have to purchase that. Let me see if I can find my strat. Where's that? All right, so all right, so the way she has it made is you have these candles already labeled, right? Like I did it before, so I kind of know what, scenario 1 or 3 candle or 2 candles. But if you're starting this is how it looks. I mean, like a 2-2. So they have he has so many different setups where he's gonna tell you, like, my favorite was like a 3-1-2 Chicago. A 3-1-2 Chicago would be something like right here. So when I was scanning for stuff, I was scanning for studs that has a 3-1-2 Chicago. So a 3-1. So I know that, okay, hey, it's an inside bar. So I scan for, this is on, this is a 15-minute chart. So as soon as I get a 3 bar and a 1 bar, I know, hey, a 3-1-2 is going to go to the upside. So having this strategy, you can anticipate the formation of the candle before it gets there, compared to how you were asking me what's the difference between the 9 EMA and the 4 EMA, because those moving average is going to have that lag to it. But with this here, you can, all right, so say this 3 bar form, right? So the only thing that's going to happen next is going to be what, either scenario 1 or scenario 2, right? So this became a scenario 1 because it couldn't take out the lower of the scenario, the previous bar, and it couldn't take out the high of the previous bar. So now when the next bar starts, as soon as it goes past the previous bar right here, you will enter right here at what, 228. All right, so let's say, all right, you will enter right here at 227. And I look at the magnitude that you, so if you were entering your call at this time and you enter right here, boom, boom, boom. So now this is 222 up, right? So you got a 2 up, a 2 up, a 1 down, even though it's showing that now they have another script that's going to, it can change the colors of your candles. But this is a 1 because it couldn't take the previous low and it couldn't take the previous high, right? So now you have, so you have a 2-2-1, and then a 2, and then another 2. So what I'm going to do is, the reason why I said I didn't want to touch on this today, the information is scattered all over the place, because when I got into his trading room, I was looking for, okay, hey, maybe he has like an outline thing that you can learn. And so many terminologies that he used: triangle the out, get, power machine gun, time frame continuity. So if you look at this, I have a 15-minute, a 1 week, a daily, and a monthly. And since I learned this strategy, when I'm trading my other strategy, I still have this in the back frame of my mind, because I look at all the time frame continuity, right? And what time frame continuity is you want to look and see, okay, hey, on the monthly, this is square that I have up here. On the monthly, square is green. On the daily, on the weekly, it's red. On the daily, it's green, right? And say we ended here on the 15-minute. Let's change this to on the hour. All right, once we change this to on the hour, we know that square is red. So you have the conflict of interest here, which is not time frame continuity. You want to have a time frame continuity where your higher time frame, whether it's your yearly, quarterly, monthly, weekly, if they are all green, and then you come to the lower time frame, your daily, hourly, and they are green, that's a go. That means that stock is going to go up. And up 9 out of 10, unless some catalyst happened, something came up and the market's selling off, that stock is going to go up. It's going to go green. So I still use it with every strategy that I've been using. The other strategy is more like, you can, like I said, this one you can use it too. The thing I was struggling with the strat was the flip of time. So like when they say the flip is going to be, hey, okay, now we're going into, so you're looking at, market start at 9:30. So your hour time is going to be what, 10:30. So he will always say, mind the flip. So on the flip, you got to go back and look at your hour and see, okay, what is my hourly showing? And I was always getting confused with that. But then later on, there's one of the ladies in that group that her name is DD. She looked like one of us. And she was very, very grateful and helpful that she broke down things for me. And I started using the 4 hours. She traded with the weekly, the monthly, the 4 hour, and then the 5 minutes. So once the setup comes into her 4 hour, she knows that, okay, hey, whatever that candle is showing in her 4 hour was, when it start developing, she going for that because she know, okay, she got a 312 on her 4 hour, and the only thing they can do is a 312 up. She's gonna get in because she's trying to go long. But if she going short or trying to do some puts, and it's a 312 down, and the candle breaks the previous candle on the downside, she is entering in on her puts, right? Some people will trade on the hourly. They will look on the hour as long as the hour is showing and there's no conflict. And there are some of the other guys, and it's such that trading room, they have so much passion because it just works and it's good for scalping. If you want to just get in, get out, just like this thing show right here with these big candles and you out, you can do that. The fastest guy that he have is, what's Brad, and he's a pilot. The guy only trade on the 1 minute frame, 1 minute time frame and 5 minute time frame. He goes in, he can be done with his trading within the first 15 minutes of trading session. He's done. Okay, so it works. So next week or next 2 weeks, I'll look at my schedule. I'll try and, like I said, the information is scattered all over. I'll try and put the pieces together and we will dive into it, dissect it. He's got tons of video and there are free videos on his YouTube website. So I guess a lot of, hey, y'all can go and watch these videos. So when we do the presentation, it probably will make things a little bit more clearer because you kind of hear the terms like, what is he talking about? He kind of talk fast. He's from Chicago. He gets so that's where the 312, because the 312 is Chicago area code. It's like his best setup. Also, they trade the gaps a lot. So every time, like now this quarter is going to be great for gaps because guess what? The whole of this first quarter, a lot of stocks drop, right? So now they're coming back up. So the way they come up is going to be, okay, if you think, let me see which would be a good, let's see some of these. Let's see Baidu. Baidu was, all right. So say this is on the weekly on Baidu. So I'm just going to use a weekly as an example, right? So say we were going to play here, all right? And now we're on the downside. So this is a 1 because this couldn't take out, this is a 3 bar here because look at how long this wick is here. And this next bar couldn't take out the previous low, it couldn't take out the previous high either. So now it's stuck in here. And most of the time they would tell you that on a higher time frame, if it's showing this, you need to go ahead and avoid it because on the higher time frame, all this is going to keep doing is going to consolidate. So they'll call it triangle day out, TTO. And before I used to be like, what the hell is he talking about? Triangle day out, triangle. But then later on I find out that, okay, it kind of looked like a triangle, right? So come here and come there because the next candle that's going to come might go here, come here. So it's just chopping you up. So you look for something that if this was on the outside bar 3, or say when we went here, if it's an outside bar 3, okay, hey, it's going to the downside or it's going to the upside, right? But then the magnitude, what they call broad information. Okay, so now you have this candle here. So if it's coming up, your next target is to take out the highs of this target. And then the next target is going to be the high of this target or this candle. The next high is going to be this candle. And you call like a pivot machine gun. And trust me, like I said, you can play this as a swing as well. So you can use it for a month, 2, as long as all your time frames are in continuity and they agree, this will keep coming up and just keep taking these highs, keep taking these highs and keep taking these highs. I think last week, I want to say, I'm trying to think of a good one that happened last week. Maybe Facebook, I think it was. All right, this is the hour. All right, so say this is Facebook here. All right, so we're just gonna use this real quick and then we'll just get off this subject so we don't digress too much. All right, so this here, if you can see, let me remove indicator so you can see only the candles. All right, so I'm gonna bring this up here. All right, so say on this hour here, we got, this is a 3 bar, so 311, that's a 1. All right, so this is a 2 up. Okay, so 2 reversal up. So when this 2 coming up, the wick is right here. It will, you kind of always look to your left side of your chart, right? So this is coming here. You got the next high is this candle right here, this one. So that's your target to take out. So I'm gonna put this on here. All right, so look at what this did. So it came all the way up. So you started from here. So that's the target. It came and see how it touched right on that line that I drew. Let's see if I can make this. I'll make this blue. All right, so you can see it came up right here. So it took this out. So it kind of hit it and then came back down and went right through it, right? So now if you're here, where's your next target? So if you look to your left side, this candle here that got this big wick is the next target. Okay, but this is on the hourly, right? So that's your next target. So now look at what look at what Facebook did. So this is what they would call like a pivot machine gun. It just came through here and just take all these candles out and came right here to this. So if you scalping or say even if you're playing daily, you day trading and you want to start taking profits, once you say your target and you take this target out, take some profit. You keep coming up, you get here. Oh, I'm sorry, I missed this one. There was one target here. All right, you took this target out. Came all the way here. You're gonna knock this target. It took this target out. Maybe by this time you're probably out, right? But if you're still in, you're going until they call what exhaustion risk is. At some point in time, you get imbalance of the market participants, and then you get an exhaustion risk, and then you're gonna see. Let me go back here. All right, then you're gonna, so this is an exhaustion risk right here. So as soon as you see this shooter, which is a shooting starts, like I said, they use so many terms for it. So like a shooting, when you see a shooting star, they'll call it a shooting star, a shooter, or a Momo hammer. So when you see a hammer, that's what they call like a Momo hammer. As soon as you see this candle form and this hammer form, this shooter forms or inverted hammer, you can say, okay, hey, I'm getting out. And then you can see what happened. the stock came down. And then guess what? Right here, you got you a 2-1-2 reversal to the upside. That's a hammer, right? So you can, right here, as soon as this candle go past this little bitty candle up here, you can jump in again and take it to the upside. So it's a very interesting concept. But like I said, I'm gonna put together a good presentation on it, kind of have like a PowerPoint or slide, because you're definitely gonna need it. You're gonna need all the different scenarios, the time frame continuity, broad information. Every 3 bar on a higher time frame is considered broad information. So like this is a weekly chart. This candle right here looks like it's a 3. So the way you draw your broad information will be, all right, so it's your trend line. You always, have like regular trend lines, you kind of draw from the left down. This one you draw from your right to the left, because like I said, you're looking at what is to your left side. So on this one, you draw from wick to wick. So say from here to here, and on the downside, you try to connect as many wicks as possible. So this one we can probably can put it. It's just not a good example, but let's say we have. All right, so this is on your higher time frame. So we go back to here. So this on your weekly. Oh, sorry, I'm going to change this one. And then whenever you draw the trend lines, it's going to stay on there. You're going to keep drawing it over time, over and over and over again, because every time you get a new broad information within the broad information, and it keeps going. So let's come to this. I still got this other strategy to get rid of. Show up here. Normally what's going to happen, I'm trying to figure out why I didn't show up. So I drew this I just do it on hourly. Because once you draw, what makes it a time frame continuity is wherever you draw your broad information. Okay, so it's showing, but it's kind of showing. Very good. All right. So you notice what I did, right? So say if I go back here, let me change this again to 1 week. And let me expand it back out. All right, so this was a weekly. So this is on a higher time. Hey, buddy, can you be quiet, please? Then we're going to finish this real quick, okay? All right, love you. All right, so this is on your weekly. That's where I drew the broad information. So we're gonna go to the hour. And look at how, before I go in there, just look at how this finished right here, okay? We only got, so this is the weekly, so every bar, of course, we all know it's a week. So 1, 2, 3, 4, 5, 6, 7, 8, 9. So 9 candles here. All these right here, all these candles here are inside of this bar, this 3 bar here, which is like a mother bar, right? Everything that's happening here is within this bar. all these weeks, previous weeks that happened is within this bar. So now we got a new broad information format. So now if I come down to say if I'm gonna enter my trade in an hour, within the hour. So when I come down here to the hour, I'm gonna reduce this. See what it did. This is the same trend line that I drew on join it, can extend it some more. Let me use the magnet. There we go. All right, this one come down here. So this, good grief. Let me disable it now. I guess it's too strong. All right. So this bar here with that long wick is the same wick that I drew on the weekly, if that makes sense. So the broad information, look at how price, so his call said price does not move, price do aggregate. Okay, and what he means by that, or what that means is over time the price is going to aggregate, but then we're talking about okay, price going up, it's going to aggregate to the point where okay, it might be up or down, and then eventually it's going to form another broad information. But so what we did, now we're in the hourly, right? So we noticed that this is going to aggregate all the way to the top. Sometimes it makes it to the top, sometimes it doesn't. But look at what it did. So if you were trading this on the hourly on this day, right? Price came all the way here and it touched the bottom. He doesn't believe, his strategy doesn't believe in support and resistance. So when you have support and resistance, which is a horizontal, sometimes you have your diagonal support and resistance. He doesn't believe in support and resistance is not horizontal. So because price aggregates. And you have these trend line here. But it's going to come all the way. You see how it touched it? So it respects it. It comes back again, touch it. And here it didn't touch it. But so you try to touch, even though I only touched, when I did a weekly, I only touched one candle or 2 weeks, I mean, top and bottom. When it came here, it did touch multiple wicks. But look at what price did. So it came all the way down here. Once it touched this last one, it went all the way up here. So how much move was this here? So you're looking at 253 was here. So if you got in, say if you took a long position, and this was what, March 21st. So if you took a position in Facebook and say, okay, a 280 call, it went all the way up to almost 299, right? And then came back down. Now, if you expand it here, let's expand it some more. Once it touched it here, guess what happened? This is a 3 bar. And it's like when it touches it, just almost kind of like touches so perfect. Like this wick right here touched that line, and that's a 3 bar. Then you got an exhaustion risk right here. So now you got a 3-1, 2 down. Then you got another 2 down, a 2 down. So now you got a little consolidation right here. So they'll call it, mother bar problems. So it's consolidating right here. But then guess what? Now you have, this is a 3. So here you go another way you can also do it. So right here, even on the hour. So we're gonna draw, like I said, every 3 bar that you get on the higher time frame, that's a whole new broad information. So now you go to higher highs. So say from the top of this wick, oops. So the top of this wick to that one. The top of that wick. And then you have, let's see, this one will be, I'll bring it this way. So you're supposed to draw it backwards. So say, yeah, we just leave it right here, or we can extend it a little bit. Then you're going through. All right, say right here. So now when you go back into another time frame on the lower time frame, so say this is an hour, let's go to a 30-minute. So now you see I have two broad information within. The other one is showing at the bottom. All right, so I kind of have the broad information here and then another broad information within this. So that's another trade you could have taken besides this whole trade that you took for like almost a month. So that's another short trade that you could have taken to the downside. So, I mean, it works. But like I said, when you first start, it's very confusing. And he has, like I said, tons of charts. He said when he started, he went over, I think it's about 10,000 charts that he went through when he first came out with this strategy, because he realized what price was doing. And he can go through charts like, every chart probably take like 10 seconds and he's done. I mean, he draw these broad information like nobody else. I mean, he has, like I said, other people that are just so, I saw a YouTube video, I think they do it through with Benziga Pro, and Brad was so pumped up with his, because I was trying to see if I could learn his strategy for scalping, where he on the lower time frame, like the 5-minute, 15-minute, whatnot. And I right in the middle of it, I just said, okay, forget it, I'm not gonna watch this, because the guy wasn't even doing any presentation. He was just standing there like he's taking some caffeine right before he did a presentation. He was pumped up to talk about the strat. And it gets very confusing when people just saying it, the words, and throwing the terms out there like everybody's supposed to know. But like I said, we're gonna make it, we're gonna get all the information. Like I said, I'm gonna put all the information together, and we'll do the power presentation. And it's very, very easy. You can paper trade it, just to start and compare with your other charts by looking at, my chart is not really set up the way, because I was paying for the script. And then when I started using it, I stopped, I canceled that. But now I think there's one other guy that have created a free script that you can use on Thinkorswim. So I'll go back to while I'm putting the presentation. So we probably can do it on Thinkorswim and do it on TradingView. For those that don't have Thinkorswim, you can use it on TradingView as well. Yeah. All right, any further questions?
Thank you so much
You're welcome.
for this lovely presentation. And I apologize for the difficulties earlier.
No problem.
But that was dope. That was dope. And I did hear you say that you will do another one. So
Yeah, we will.
You to that.
I told you my wife is half stay-at-home mom, so she will help me put it together, I'm sure. So
did she know that?
Too. Oh, she does, and Miss Crystal knows too. So we'll get it together. Probably be like a series, because I'm sure once you do the first presentation, people are going to go back and look at it, and still will come back and will be confused.
Yeah.
It's nothing compared to what we did, which is just like, hey, you're looking at these, resistance and support and pivot points where you know exactly where to stop. But it gets a little confusing, but over time, you will get it.
Yeah, no, I definitely have used the on-demand feature. I think that's a great way for us to practice, just to get used of, identifying trends and candlesticks. So
Yeah.
Patrick highlighted it earlier today. I definitely recommend it as well.
Mhm. And you can use it for our rolling fours. You can go all the way back, because all you got to do is just change the date. Put in, now going back like 2-3 years or whatever, so it's a lot of data that it has to load, so you got to be patient for it. It slows down a little bit, but then on the top hand corner where it says real time, you would see that it will be thinking, and it's just trying to load the data, but it takes a little while. But then that's how, I was able to go back and test. When Mark first started showing us all these strategies, I go back and test, hey, as a mage, it's okay, how they did for those 2-year run, especially if you had them for 2020, how much money you would have made. But now we know what we need to do. So, yep.
All right. Well, I'll talk to you and Keisha and Crystal later. So we can
Absolutely.
tee up the next one. I'll give you a week or so.
No
Again,
problem.
we appreciate you and your time and the material. For everyone that's on the call, that's still on the call, it will be posted on the YouTube channel maybe by tomorrow. But y'all have a good rest of your Saturday.
All right, yeah. Bye.
Thank
Appreciate
you.
Patrick.
Yeah, you're welcome.
Thanks a lot, Patrick.
Yeah, no problem. Stop sharing.